Alright guys, and do I have another video for you, and it's about all things regarding Mildura. Now I do have to apologize, it's been a long time since someone's requested this video, so I thought I'd get around to doing it, and here it is. Now Mildura is a location that's about 5 to 6 hours away from Melbourne CBD. It is right on the border of New South Wales and Victoria, but it is on the Victorian side, so you're already slapped with the extra stamp duty and land tax, but nonetheless, we're going to talk about all things regarding this location. And the first thing I like to do, as always, is show you guys the data behind the location. It is because that is what we make our decisions of. Now, when we look at Mildura, you can see the median buy price is around $500,000. I believe that's a lie because I find the properties or the good properties are around that 550K price point at this point in time. And you can achieve close to a 5% yield in this location, or around 4.5 to 5% yield. And when you start to look at this location, you can see it has a population of about 50 odd thousand people. This location does have about 50,000 people, with Maribyrnong close by, Mildura, Red Cliffs as well, all combining into each other, which is all having great potential. Now, Mildura has been an extremely consistent performer over the last 10 years. In fact, it doesn't move like any other regional location that I have seen. Most regional locations, they go through ebbs and flows. And what I mean by that is they usually go through a sharp spike and then they go through a flat spot and then starts to rise again, much like Latrobe is happening right now. While as Mildura has been an extremely consistent performer over its lifetime, over the past 20 odd years or so. And in fact, over the last year, it's done about 10% growth, and with the median rents rising about 3.5 to 5% in some parts. You can see affordability is very good at under 30 years. So despite all the growth over the past couple of years and over its lifetime, it is still extremely affordable. Now, when you look at the data behind it, it is a little bit confusing. You can see that stock levels are a little bit flat and not really trending down, and demand levels don't seem as high. Now, what I have experienced though by talking to people on the ground and have seen what's happened over the past 12 months or so, I would say that there's a lot more heat in the market. It is very competitive. It is hard to find good quality properties. So I'm a little bit iffy about this data. You can also confirm this by chatting to local agents on the ground, but what I generally find is that stock is pretty low and demand is pretty high, not only from owner occupiers, but from buyers agents as well and other investors, because they see a lot of value in this location. Inventory is sitting around that 1 month mark, fluctuating between 1.4 1 month mark, which isn't overly tight, but it is still relatively competitive and tight. And vacancy is sitting around the 2.64%, so a little bit on the higher side as well. But if you consider this location, you can trade that off. Now, I just also want to note you have got some suburbs close by that are also showing positive in the data. You've got this location here where the median buy price is around $420,000, and you can also see here that stock levels and demand levels are on the sort of softer side. They aren't trending in the best direction. I want to see them more on a downwards trajectory, and I want to see vacancy rates lower, but hashtag can be somewhat a little bit off on the vacancies. But overall, this location as well, from what I've heard from on the ground feedback, is that it is fairly competitive as well. I'm not sure exactly why it isn't captured across on the data on hashtag better, but I generally find the stock levels are pretty tight. The other location that I also want to mention is Red Cliffs near Mildura, a little bit south of Mildura, where very similar around that 500K price point, or the buy price point, where you can see it has also been an extremely consistent performer over the past 20 odd years or so. And rents have also been rising with about 5% rent increases. Definitely a good owner occupier area with 24% rented to owner occupier ratio. And once again, a relatively tight stock levels and relatively high demand levels, I generally find. So when you look at Mildura, it's these three locations which are looking quite interesting, which is Mildura, Maribyrnong, as well as Red Cliffs down here. Now, Irrimpul as well. I would also generally say that when a location is starting to boom, you find these surrounding suburbs as well starting to increase in value. So I wouldn't be surprised if that looks better across the data as well. Now, one thing I will say though is that Mildura has been growing for the past 12 months. When you look at it, it's about 20% growth over the past 12 months, around 11% per annum over the past 3 years. So it hasn't been silent. In fact, I know a very big buyers agency was buying across Mildura over the past 12 to 18 months. And guess what? They're talking about on their YouTube channel now. So this hasn't been any real secret. In fact, even mainstream media like realestate.com, news channels have caught on to it with with articles like the booming country town investors can't get enough of, which is, literally 15th of August, which is about 2 months when I upload this video. And investors have been flocking to the remote Victorian town, which is slowly gentrifying, but experts warn returns aren't guaranteed. Let me tell you something with this last statement though. Nothing in life is guaranteed, even investments, right? We take the best chance we've got with the best amount of data as well and align it with our investment strategy. And overall, I generally find that Mildura, when I talk to agents on the ground, when I talk to other locals, property managers, I find that Mildura is a pretty competitive market. It is hard to find good quality properties at relatively low price point. Under 500k is very hard, or you won't find good quality properties. 550 is around the sweet spot at the moment with Mildura, but it is still incredibly competitive. So if you go to that location, please have the right mindset when approaching it. But like always, guys, jump into the private community. We have over 350 members helping each other out. It's literally $35 a month. It is an absolute no-brainer if you are trying to invest into property, trying to find the best locations. Because even though I didn't make a video about Mildura for, this whole year, we've been talking about this location since about February, and you guys would have missed out if you weren't part of the private community. So make sure you jump in, so the next locations to invest into, you are part of the momentum, right? So jump in now. It's an absolute no-brainer. You guys already know the gist. But there is still more to cover about Mildura because it is a breakdown video, and with all my breakdown videos, I like to show you the economy side of things because we want a stable location to invest into with good fundamentals. And the first sign of a great fundamental is that it's had no cyclical movement, no big downtrends, no big uptrends, just a very consistent performer. And so when you look at Mildura, 57 odd thousand people, 25,000 jobs, and a healthy economic output of $8 billion. So it's not some small regional town like Ararat or Horsham. It is a large regional location, or relatively large regional location. We can see the GRP has also been increasing every year, which is a great sign to see. And when we break it down by industries and employment, we can see that healthcare, agriculture, retail, trade are its biggest employers, with no sector taking up more than 25%. So a very reasonably diversified location. And when we look at the regional exports, we see what the local area is producing. We can see majority of it is tied to agriculture and manufacturing. So if something were to happen to the agricultural industry in Mildura, it can have an impact on house prices. But when I look at the overall history of Mildura, when I see it's consistently performed over 20 years, that gives me the confidence that this location is stable, economically diversified, and a solid location to consider for both the short and long-term investments. Now, of course, do your own due diligence, make sure it fits your own risk appetite and strategy, but this is a great sign for us to see. And when you look at the unemployment rate of Mildura, it has generally sit under 5% and recently on a small downtrend at around 4%, which isn't bad at all. People are reasonably employed in this location. 4 to 5% is what I generally find across most regional locations in terms of unemployment. So this is nothing special, but it's also just a good sign to see that people are employed, they have jobs, they can afford the mortgages on their properties. Now, that's not a direct one-to-one correlation, but it's just a good sign to see nonetheless. Now, from a data perspective, it's looking good. From an economic perspective, it's looking good as well. I just want to talk about some of the risks that you should be aware of when investing into Mildura. And the number one is always public housing, right? We always want to be avoiding public housing pockets in Mildura. And you can see on this website that there is significant portions of public housing, especially around this top right-hand corner near Benetook Avenue, Ellswood Crescent, as well as this sort of left-hand corner up here around 10th Street. You do really have to make sure that you are avoiding these public housing pockets around 14th Street and Walnut Avenue, making sure that when you buy a property in a location, especially in a regional location, that you talk to a property manager and ask them, hey, is this property near any public housing? Because we want to stay about 1 to 2 streets away from any of that. Now, the good thing about Mildura is that unlike other regional locations like Shepparton or Rockhampton or Townsville, is that Mildura for the most part isn't actually close or on any flood zones or very close to any bushfire zones, which is really good to see. So generally insurance should be around that $1,500 to $2,000 mark for a $500,000 to $600,000 property, and if you can get that, it's pretty stable. So from that side of things, it's not something to be concerned about. So now that we've covered both the public housing as well as the zoning layers and checking bushfires and flood zones and etc., I want to show you guys an example property that you could be considering. Now, this one here was sold on the 9th of September for $522,000. Now, it's nothing spectacular. It's a nice brick home with decent flooring, dated interior slightly in terms of the walls and the paint and etc. But these sort of homes is what I look for as a long-term investment. You can see one large tree there near the fence, which may cause issues down the line, but overall, a very good property, right? Even look at the property layout. It's not the best, but not bad. Especially an older home, they usually do have the closed floor layouts. And something like this was sold for $522,000. And when you look at the rental estimates, you can see that it always varies a little bit around 600, 560. This one is 350. I assume that's close to public housing or something because it seems quite low. This one is being for 420. This one 2x1. 380, 3x2 is 550, 450 for Wentworth, 520 here. And so when you really look at the rental estimates, you can really expect something for a property like that, which is a 3x1 brick home, anywhere to be around 450 to 500. So conservatively, I'm going to put around 480 for the property, and that will give you an estimate of around 4.78% in terms of rental yield. Now, what that does is that it puts you about negative 15,000 in terms of cash flow, as well about negative 1,100 per month. Now, don't forget in Victoria, you do have the land tax, so you have to accept that. But overall, 14,000 is not the worst, but not the best either. It's an acceptable amount. It is what I generally find with most regional locations at this point in time of investment. Obviously, if you have better rates, you'll have better cash flow, etc. And something like this that's been a consistent performer, in 20 years' time could be worth close to 1.5 million. After 10 years, maybe $900,000. And a property like this, you can hold for a very long time. And you can even do an internal cosmetic renovation to uplift the equity and pull out some money to go buy and purchase again. Overall, to me, Mildura is a location full of potential. It wasn't the same 12 months ago, 18 months ago, when it was a lot more quieter, where properties were around the 450 to 500k price point for the same brick home that was maybe fully renovated with yields of around 5 to 6%. It has definitely grown, and it has caught the eye of mainstream media like realestate.com and other major outlets. It is definitely in the public eye. It is not a secret. You would be late to the party, but there is still good opportunities out there for a purchase for both short-term growth and a long-term hold. It has all the right factors in terms of economic diversity, affordable property prices. The only thing you would say is not close to Melbourne CBD, but that isn't an issue when we're considering regional location. So overall, Mildura is a good, decent location to consider. And if you have any questions at all, jump into the private community. We have over 300 investors helping each other out make the right call for them. If you have any questions at all, let me know. Till next time, thank you very much.